Thanks for waiting. We are going to get started. I just want to give me 1 second to put on. Okay, we're ready. So anyway, thank you everyone for being here. We're going to get going. As you'll continue to hear from MSIC, this year's focus for MSIC is the future of the movement. Many of our trainings are going to center around what credit unions need to be thinking about and preparing for in order to remain competitive and relevant in the financial services industry. So topics from innovation with generative AI to blockchain and crypto, to digital currency, to shifts in member expectations around personalized services. There's a lot to know and to stay current with in order to keep your credit unions in a loop that is changing and growing all the time. And it's especially important to keep modernized and modernizing your credit unions as it pertains to member growth, experience, and engagement. And that's why I invited Celeste Cook, who's the CEO of CU Strategies, to join us today to discuss what credit unions can do to enhance the member experience in a digital world. A little bit about Celeste. She has a comprehensive presentation, so I'm going to keep it brief. But she is the founder and president CEO of CU Strategies. As a credit union industry strategist, Celeste partners with credit unions across the nation, providing strategic planning services and lending, consulting, and training. In addition, she provides lending assessment services, sales and service training programs, leadership coaching, and consulting services. She has worked in the credit union industry for over 20 years and has been a professional speaker and trainer for more than 15 years. Most recently, she was at the CU Conference's annual Credit Union Spring Training in Florida, which received rave reviews, and that's also how we connected. And so we are delighted to welcome her to speak to our cooperative today. And just a quick note about today's format. Following Celeste's presentation, we have designated time for a Q&A, so feel free to keep your questions until then. You can also send them over via the chat box, but we won't get to them until the Q&A portion of the presentation. And that's it. Celeste, I hand this over to you. And again, thanks for being here with us today.
Thank you, Erica. Thank you for the introduction. I'm excited to be with you today. And thank you for joining us today. We hope that you find great value in what we present. The goal is to provide you with real, relevant, and relatable information that you can take back and hopefully apply some of the strategies that we share. And so we'll dive right on into the presentation. Let me preface it by saying that I always provide a lot of additional supporting documentation. So as we go through the presentation, there's a good chance we will not get through the entire presentation. The whole purpose of that is to provide you additional supporting documentation that you can utilize and reference that will support anything that we discuss and share throughout the webinar that we're going through. So again, as Erica said, if you guys are just willing to jot your questions down, share them in the chat, and we'll be glad to come back on the back end and answer any of those questions. We'll allot 5 to 10 minutes for a Q&A on the back end for you. So having said that, we're just going to kind of go through and begin our presentation. And let me get here. So Erica, if you're with us, I've shared the presentation.
Yep.
But I do not have the ability to control slide transitions. So
Tony, are you there, Tony? Because I don't know that I can do it. I think
the host can.
Yep.
Okay.
I'm here. What's up?
Celeste said she's not able to move the slide forward, but I don't know.
You got to click on the slide, on the slideshow.
That's
advance.
That's what we're doing. Oh, there we go.
Yeah.
Tony,
Okay.
Thank you so much.
Great, thanks, Tony.
Yep.
So we were going through the page now. So Erica's already shared some information. with you regarding me, but this just gives you a snapshot of who I am and what I do. And again, I have been in the industry well over 20 years and going on substantially close to 25 now. So the overview itself, we just want to make sure you understand the elements of what we're covering today. One, we want to explore the power of the human element in the digital world. We will also talk a little bit about some key strategies to help us develop a culture that is more relationship focused versus transaction focused to build stronger relationships and increase retention. Simply because credit unions are struggling with the retention of members. On average, we're seeing credit unions out there, you know, if you bring in 1,000 new members, we tend to lose 800 and we net 200. If you bring in 100 credit members, you know, if you're a smaller credit union, you bring in 100 members a month, we tend to lose, you know, 80 members. And so there's a 20% retention. And so as an industry, just in 2024, our overall membership growth was right at 3%. And we really would love to see credit unions expound on that. And our biggest challenge is also with the Gen Zs and now our new generational group, which is called Generation Alpha, is trying to not only attract them, but also try to find a way to retain them, because there isn't a sense of loyalty when it comes to the Gen Zs and Generation Alpha. You know, it's just learning what is it that they value and how do we retain them long term, because we're already seeing a strong percentage of the Gen Zs. They are really connecting with the fintech companies. And so we'll talk a little bit about that and what we can do to add value to not only attract the Gen Zs, and also attract millennials, because we don't have a strong percentage of millennials in our membership. And so we'll talk about some key points on that too, and how to not only attract but retain. And then how do we increase member engagement in a digital world? And that's important as well. So another key point is just talking about what can we do to attract and build those relationships with millennials and Gen Zs, as I said a moment ago. Also, what can we do as credit unions to add greater value and offer solutions that are real, relevant, and relatable, you know, not only to our members, but people in the communities. And again, we'll create a stronger focus on the millennials and Gen Zs, seeing that, you know, millennials are, as of 2025, were projected to make up 75% of the workforce. So if that's the case, we want to go back and we want to create benchmarks based on what percent of our members are millennials and Gen Z. So base it on an age breakdown demographically. The 18 to 24, which is really that, of course, Gen Zs go from 18 to 28. But you're looking to get the early adopters of the 18 to 24-year-olds. So I break that segment out separately just for that early adoption of those that are graduating from high school and those that are just about to graduate from college. And then you want to look at the age group of your millennials, which run from 29 to 40, you know, around 40. And what percent of your membership is made up of that group? In addition to that, you want to create another benchmark so that you can show progression of, are we doing the right things to attract and retain these two generations? And the second component is take those two demographics of the percentage of age group and then compare that to the percentage of that age group. How many of those have loans? What percent of the millennials and Gen Zs and in the membership segment, what percent of those actually have loans with us? And create a benchmark so as you move forward after today, if you implement some of the strategies that we share today, you can see, is it working? Is it not working? And what's not working so well? And what do we need to tweak to take that to the next level? So it should be a part of your strategic plan. As a strategic planning facilitator, when I go into credit unions, one of the things we do is we identify where you are in terms of penetration of millennials and Gen Zs, what percent make up your membership and what percent make up your loan portfolio. And from that point moving forward, you want to track that to make sure that everything we're doing is working for us to increase that percentage year after year. So keep that in mind as you go forward with your strategic planning sessions. Again, that's just one component I bring to the table as a strategic planning facilitator. So when we're thinking as credit union leaders, it's really important for us to, always rethink the way we do business with members and people in our communities. So Erica mentioned that early on. We have to be progressive. We have to think outside of the box. We have to market in a way that's real, relevant, and relatable to the Gen Zs and millennials. We have to make it seamless, because the one thing that we hear from Gen Zs, they say, don't make me double click. Don't make me jump through hoops. So anything that we offer, we need to make sure that it is a seamless experience for them. We have to be able to offer them every option that could be available, meaning online services, mobile app. They like cash apps. They like to chat. But what we're finding from Gen Zs is they're saying, yes, I may never walk into a branch location. And I generally don't want to speak to anyone. But if I do, I want you to make it easy for me. And millennials have said that, hey, I don't mind being with a credit union, but don't make me jump through hoops for the products and services that I want. And so we'll talk a little bit about that as we go through the presentation and give you examples of what are some things that have served as barriers to entry for millennials and Gen Zs to come into credit union world, which by far is superior to any fintech company out there. So let's keep that in mind, is that we are competing against the fintech companies. We are competing with SoFi. We are competing with all the fintech companies out there that are saying, hey, we will make everything easy for you. We will pay you $200 to open up a checking account. We will pay you cash. We'll give you 1% cash back on every transaction. So there are so many things that they are reeling them in with, but on the back end, there are service fees and other hidden fees that aren't disclosed on the front end that a lot of the Gen Zs and millennials are not aware of. So the one thing you want to do is we focus a lot on financial literacy. I think that's a key buzzword in our industry today. And what truly differentiates us from other financial institutions. But what we're finding is that because that has become such a big, topic of conversations, that the banks are now even saying that they will offer financial literacy, that they will do a credit review for you, that they will offer you a credit builder program. And we're finding just from being in credit unions on a regular basis and pulling credit reports, we're seeing a lot of fintech companies capturing these youthful groups with secured credit cards with a lot of hidden fees in the background, and saying that they'll pay these the youth 3% interest on their savings account. And so having that knowledge of what the competition is doing allows us to say, okay, how can we compete in that arena? And how do we reach those individuals when they actually Google credit builder program? So one of the things we have to do as a credit union is we have to make sure that we have a very strong, powerful search engine optimization. Very, very critical for us to pop up when a Gen Z or millennial puts in, especially Gen Zs, we're seeing that more with Gen Zs, and they pop in and they'll Google credit building. Well, when they do that, all the fintech companies have a product called Credit Builder Program. So if you currently don't have a loan product that's called a Credit Builder Program, you may want to incorporate that into your product line and ensure that you are marketing that as a credit builder program. And if you can do that and optimize your credit union into that, search engine optimization, if your name pops up and then you make it easy for them and seamless, then you have a really good chance of capturing that Gen Z member. If we don't make it easy for them, you can lose them very quickly. And they will very quickly go to a fintech company who will give them whatever they want because they're going to charge them more fees on the back end, which is something we don't do as credit unions. So I think the educational piece is also very important, and what we educate on. So, for example, every Gen Z and millennial and almost every person out there today is very much in tune to their credit score. And the reason for that is because credit scores impact so many facets of your life. The credit score does not just impact the interest rate on your car loan. It doesn't just determine, your interest rate on a credit card. And in some cases, it doesn't just determine whether you qualify for a mortgage or not. It also impacts your auto insurance premium. You can have a perfect driving record, but if your credit score falls below 625, your insurance premium on your auto is going to be substantially higher. Your homeowner's insurance premium is based on your credit score. Your mortgage protection insurance, that premium is based on your credit score. Whether you can get a job sometimes is determined by your credit score. Whether you can live in a desirable apartment complex because you make substantially enough money to live in that luxury apartment complex. Just because your income allows it, if your credit score is not above 625, you generally will be turned down from living in that luxurious apartment complex, and you have to go to a less desirable area based on your credit score. So since the credit score is a major driver of your life, and because it's become such a consuming factor in people's lives, they're following their credit scores. So one of the things that you may want to do as a credit union is offer a credit score management seminar based on educating people on what is a credit score. How does your credit score impact you? How do you impact your credit score? How do lenders look at your credit score? And how is your credit score used by lenders? Most importantly, how do you maximize your credit score? So as a credit score expert, I've been inspecting and validating the FICO scoring model for over 20 years. When you can understand and have a good guesstimate of how many points you lose, for example, on a 30-day late payment, which is an average of about 60 points, and you can educate someone and say, if you miss a payment on your Kohl's credit card and it's a minimum payment of $25, you could lose up to 60 points on your credit score. That education is real, relevant, and relatable to individuals, because the impact on that score, if you're 700, will drop your score to 640. And your 3-digit credit score does determine what your payment is going to be on your auto, which is one of the biggest purchases you make. So that education that you share, and for example, I have a credit score management seminar, PowerPoint, that we provide to preferred partners in the credit unions that I work with. And we actually demonstrate and show individuals when we go in and we do 1-hour lunch and learns with various select employee groups or companies in the area, if you're a community chartered credit union. And we have found that most companies are very receptive to an educational program based on credit score management, how to manage, protect, and maximize your credit score. So we just recently increased a member's credit score with one of the credit unions that I work with. We increased their credit score from 470 to, no, sorry, correct that. It was 530 to 740 in 7 months. And so when you're able to take someone's credit score and increase it from below 600 to 740, you not only have changed their life and the impact of premiums on autos, homes, and other factors, you've just made a huge impact on their monthly payment on their auto loan. So for example, if your credit score is 600 versus 740, you could pay on average on a $25,000 auto loan an additional $200 per month just because of your 3-digit credit score number, which over the life of the loan of 60 months would be $12,000 extra that they would pay on that car loan, all because of their 3-digit credit score. So when we think about the way we do business with members and people in our communities, I think that's a key driving point on what we can do to have an impact, not only on individuals, but employees that work for companies, and helping them restructure their debt, lowering their monthly payments, helping them maximize their credit scores, and helping them eliminate high interest rate credit card balances. So from a digital standpoint, what you want to do is, how do we make this seamless and easy for Gen Zs, millennials? And so one way is just creating, for example, a QR code that makes it easy for individuals to scan, fill out a form. It's not an application, it's just a form that authorizes individuals to pull credits, for us to, as credit unions, to pull their credit report. It allows us to do a holistic review and see what we can do to actually lower their monthly payments on loans, restructure their debt, help them get rid of high interest rate credit card balances as high as 29.99%, because the majority of consumers in this world do not know there is a 1 minute or 1 day default rate. So with the majority of credit card companies, they have a default rate of up to 29%. We recently saw a credit card with an interest rate of 40%. So the default rates now are going up, but simply because interest rates have gone up. So keeping that in mind, I hope you're already rethinking some ways that you can do business with your members, businesses in your community, and reaching more people in your community. We're going to talk a little bit about that as well. And then try to define what is the fine line between our digital world and our human element, and how to create that balance to keep us moving forward. Now, renewing our philosophy of people helping people, the one thing I would challenge all credit unions to do is, I would challenge you to go back and then break down the percent of members who are A plus, A, B, C, and D, and E, and then compare that to the percentage of loans that fall under A plus, A, B, C, D, and E. And if we find that, for example, one credit union that I was working with, 35% of their members were A and A plus, but 70% of their loans were to A and A plus. One credit union had 50% of their members were e-paper, but only 5% qualified for, not qualified, but had a loan. So how do we create a healthy loan portfolio, and how do we increase profitable performing loans without increasing delinquencies and charge-offs? And I think it's really important that in that relationship building process is that, one, not to assess risk by credit score alone, because if we assess risk by credit score alone, we're probably losing a lot of good quality loan opportunities. Excuse me. I think it's important for us to assess risk by how members respond to our questions. For example, we had a member who had a score of 480. She was 90 days past due on her mortgage. She had one credit card with a $500 limit. She had 3 medical collection items on her credit report. She requested a loan, unsecured loan request for $1,000. They submitted it without asking any questions. Of course, that loan was denied, which it should be. But when we got it back, it was presented to me. And so we made an outbound call to the member and we asked the right questions. And the key is to train your people to engage in the right conversation, ask the right questions. Asking the right questions will lead to the right conversation. If you engage in the right conversation, you can create and usually will create the right solution, which we define as the optimum solution, which creates a win for the credit union, preferred payment status, a win for the member, lowest interest rate, and then a win for the employee who feels like, one, they have truly made a difference in a member's life. In her case, we asked her what happened because she had previous perfect payment history prior to 6 months ago. She indicated her husband had injured his back on the job, was out of work for 6 months. They got 90 days behind on their mortgage. That impacted the score 130 points on average. She had one credit card with $500 limit, $500 balance. That impacted her score 50 points. We asked her why she opened it: to buy groceries, to feed her children. She had 3 medicals, which impacted her score 30 points per medical. That's 90 points. She had 1 trade line to open on the Capital One credit card. That was 10 points. Then the inquiry that was on the credit report, she had 2, one with the credit union, one with Capital One. That was 5 points each for 10 points. This individual was a 770 before her husband injured his back on the job. So the key question to ask was, is he back on the job? And she said yes. No one asked her what the value of her home was. No one asked her what happened. And when we pulled the value on the home, she had 80% equity in that home. So we turned a denial into a future loan and built loyalty with this member, because instead of giving her $1,000 to get caught up, we did a complete restructure of all of her debt, refinanced her home with us, paid off all her debt with the equity in her home. And at the end of the day, she had an extra $595 cash because that's how much we lowered her payment. So when we talk about the philosophy of people helping people, it's very important that we truly help all people, not just people who qualify for a loan based on their credit score and their debt to income ratio. Because credit unions are losing opportunities every day as a result of that. We are losing loans every day with Gen Zs and millennials, because if they don't have a credit score, some credit unions will require cosigners, down payments, and Gen Zs and millennials don't have down payments. But companies like SoFi and the fintech companies are giving them 100% financing, but charging them higher interest rates. So we as credit unions need to rethink the way we structure our products and how we price them, because the goal is to, 1, price for the risk, 2, take the risk, and then 3, manage the risk through the relationship. So when we think about our digital world, the one thing that I can say to create the differentiation of attracting versus retaining is you have to have all the digital options to attract Gen Zs and millennials, because they have their phone with them at their fingertips and they Google everything. So if we can show up in their timelines and we can show up in their search engines and we can speak their language of credit builder program, we will help you establish credit. We will help you establish a credit score of 700 in 6 months. We will get you in your first car. We will get you in your first home. Then we can attract the Gen Zs and millennials. But to keep those members, it requires the human element, the relationship building component. So we have to find a way to revive our staff and get them engaged in such a way with our members that we are education driven versus sales driven. When we are education driven, which is consultative, we can educate people on why they may want our products, why they may want to have our checking account versus another financial institution's checking account. And secondly, are we making it easy for them? Do we make the member jump through the hoops, or do we jump through the hoops for them to switch to our checking account from another financial institution? How are we framing that in our conversation? How are we making it easy digitally? For example, can I just scan a QR code, fill out a online membership form? Can I actually go through this process without having to engage with a person? Can I do it with a single click? Are we going to require them to come in? Are we going to require them to put $50 in their savings account or their checking account? Or are we going to connect with them, make it seamless, educate them, and perhaps give them a complimentary savings account with $25 in it versus saying you have to have a savings account and you have to put $25 in it? I think you can attract those Gen Zs by saying we offer you a complimentary savings account with $25 versus you have to have a savings account before you can have any other service with us. So if we can market and frame things and offer things digitally, but that leads to the relationship connecting piece of let us educate you on how to manage and protect your credit score, how to protect your credit long term. We will partner with you through financially challenging times, educate me if I'm going through a divorce and how's that going to impact my credit score. If my ex-spouse, if I'm joint on a loan with them, am I protected by the divorce decree or not? That education is impactful. So reviving our staff and building their confidence through the knowledge of educating our members and people in the community on what they can do to maximize their credit score, manage and protect it, what they can do to lower their monthly payments with your credit union, how we can partner with them to help them eliminate high interest rate credit card balances. That aligns perfectly with the phrase, make it real, relevant, and relatable to me. Because honestly, that's not just real, relevant, and relatable to the Gen Zs and millennials. With the cost of living and interest rates where they've been, and the cost of food, and what people are paying for rent and homes and housing now, people are living paycheck to paycheck. It is projected that definitely in 2024, we unprecedentedly created the highest level of credit card debt in the history of the US, which leads to the potential for more bankruptcies, which is projected in 2025. So the question to ask ourselves as credit unions is, what can we do today to help people in our community eliminate their high interest rate credit card balances from as high as 29% down to as low as whatever your lowest interest rate is for an A+ member, 6%. So offering the right solutions comes only from engaging in the right conversations. And that's how you want to train your employees. You also want to revive your staff and elevate them and develop them to think like leaders and to perceive themselves as leaders. I'm a strong proponent of developing all staff to think like leaders, because if you think like a leader, you engage like a leader. And I think employees have so much potential, but they don't see that they have the capability to engage as a leader. So if there's another takeaway, put that on your list. What can we do to develop our employees to not only to become leaders? And to become a leader, you have to, one, understand what we look for. What does a leader look like as a teller, as a loan processor, as a new accounts individual, as a call center rep, as a collection person? What does leadership look like? How would you think as a leader? And then how would you engage as a leader? What are the attributes of leadership that you want to embrace as an employee so that you can brand yourself as a leader? And that is leadership development. And that actually plays a role in your succession planning. Because leadership development from the teller position all the way up is a natural progression for succession planning. So keep that in mind as you move forward. So on this slide, I like to share what James C. Penny quoted in the book called Customer Love, because I believe we have to, the day of just meeting our members' expectations, that's gone out the wayside. And with digital technology, we absolutely have to have it. You cannot attract millennials and Gen Zs without digital options. You have to give that to them. And instead of just saying we provide good service, or we really, are great at providing service to our members, I think we have to elevate it to service extraordinaire. It has to be extraordinary service. And James C. Penny quoted it perfectly. It's the service that we're not obliged to give that customers value most. What that means is the service you give me, I did not expect. For example, if a member comes in and says, I'd like to do a transaction today, I want to make this deposit, I'd like to, transfer money. And we say to our member, hey, while I'm doing your transaction, if you sign this form, we'll actually see what we can do to lower your payments on any loans that aren't with a credit union. We'll look to see what we can do to maximize your credit score. And we'll see what we can do to help you eliminate high interest rate credit card balances. It's just a free service we offer our members. That is a very powerful relationship building tool and retention tool. Offer it digitally on your website. Create a QR code so that your business development team can go out into the community, reach out to the companies in your area, provide 1-hour lunch and learns on credit score management. Understand, credit score management is debt management. They go hand in hand. Why? Because if you increase somebody's score from 600 to 700 or 740, then you can actually restructure their loans and overall lower their payments an additional $100, $200 a month, giving them extra cash, helping them pay off 29% interest rate in credit card debt, getting it down to as low as 6%, putting them in closed-end loans, giving the credit union preferred payment status through equity in vehicles and or homes. That increases probability of payment to the credit union. So, for example, we had a member, we increased their score over 100 points. We lowered their monthly outpay by $300 a month. Over a 60-month term, that was a total savings of $18,000 cash that member got to keep in their pocket. The member did not come in asking for that. So I believe we exceeded the member's expectation and provided an extraordinary solution that made a huge difference in that member's life, because that member now gets to keep that $18,000 instead of paying these credit card companies that are charging 29% interest, or other financial institutions that are charging higher interest rates on their vehicles. So by doing a restructured loan, paying off their vehicle, paying off their credit card debt, then coming back in and giving them one single payment with you, because you're using their vehicle to pay it off, or you're using the equity in their home, because we know that in the last year to 2 years, homeowners have seen an instant increase in equity in their homes due to the fact that interest rates have gone up and there is no supply. So using that equity in their home to help them achieve financial freedom, become debt-free with the exception of their mortgage, is a life-changing event. And especially when the member didn't ask for it, but you offered this service and it's a free service. Keep that in mind. If anyone has any questions regarding any information I've shared, and you want more information on it, feel free to reach out to me after the presentation. You can shoot me an email and I'll be glad to schedule a one-on-one Zoom with you to answer any questions you have and expound on anything I've shared. Now, based on what I've shared with you, one of the things that I like to do when I go into credit unions and when we do strategic planning or any training that I do with staff, we like for everyone to write down, based on what you're hearing today, what are 3 to 5 things you might stop doing? What are 3 to 5 things you can start doing? And what are a couple of things that you want to change? Meaning, we're doing this really well, but how could we tweak it to make it even better? So as leaders of credit unions, we need to continually be evaluating and reevaluating. So the question is, what can we do differently to engage our members, build relationships, and help the credit union grow in a digital world? So I hope I've shared with you some strategies already, So you can take a moment, jot down on a piece of paper 3 to 5 things that you might stop doing, 3 to 5.
Hey, Tony, did we lose Celeste? Are you there?
I am here. I think
Should
we
have a bit.
lost Celeste.
Does she have a bandwidth issue? Hi, everyone. Sorry, we've just. Tony, can you tell if she has a bandwidth issue?
Uh,
Oh,
oh,
there she
there
is.
she is.
Celeste, are you there? Can you hear us?
I can.
Oh, we lost you for a second. Okay, you're here.
Are we here? Okay,
Yep,
sorry about
yep.
that.
That's okay. No
We're
problem.
good?
Yep, we're
Okay.
good.
Great. Okay, so having said that, what we're saying is, I'm sorry, I was reading a note from Tony. So let's keep that in mind as we move forward. And we're going to go forward with this presentation. So Tony, are you still with us here? And can I get control to go to the next slide? Thank you. Okay, so key strategy that should be on your strategic plan, number 1. What are we going to do to attract millennials, Gen Zs, and the alpha generation? 2, what percent of your membership do you want to be millennials, Gen Zs, and alpha generation? So make sure that you put that on your strategic plan. And it's one thing to say, hey, we want this. It's another thing to have to come up with a plan to bring that to fruition. But it needs to be on the strategic plan and create a specific number. What percent of your membership? And really between Gen Zs and millennials and the alpha generation, they should make up a minimum of 50% of your membership, minimum. So keep that in mind as you move forward. And it requires, without a shadow of a doubt, digital options. Give me all digital options. Give me the opportunity to apply online. Give me a QR code and let me scan. Let me, fill out my application online. Chat with me online. Make it easy for me. But most importantly, you've got to get my attention. And the only way you can do that is through search engine optimization. So that has to be on your strategic plan as well as you move forward. So next slide. And so Tony, you've got control. And so when we think about digital technology, we also have to think about all the moving parts that come with that, because we know everybody's on their phone 24/7 and they're Googling everything. And so everything's streamed, music, movies, everything, but they're also wanting their finances at their fingertips. They want to apply at their fingertips. They want everything. They want instant gratification. But with that, here comes the disadvantages of that. Data security, crime and terrorism, the hackers, the complexity that goes into creating all of this to create that digital transformation, privacy concerns. I highlighted social disconnect because I think that is the one piece that will work against us if we do not integrate ways to build those relationships with those Gen Zs and millennials, because there is no loyalty without relationships. And with relationships, you have to build trust and there has to be value. What are you going to add to my life that's going to give me greater value? Why would I choose you over my fintech company who makes it so easy for me? And for me, I believe that's the educational piece. How are you going to partner with me? How are you going to educate me to protect my credit score? Because there's so much misinformation out there. We had one individual that opened up 11 credit cards because some fintech, company told him he needed to establish credit. So he opened up 11 credit cards. Well, that killed his credit score 155 points. So the education we shared, we turned him around and put a plan together on what his score would be in 12 months and what we could do to maximize it, and then what we could do to lower his payments once he got to that score. So that social disconnect is what requires a human element. You have to create the balance between our digital world, which is absolutely required, and the human element, which allows for the retention building component of how do we keep these members long term. Then there's concern about job insecurity for the human element. And I don't think that we as credit unions will ever compromise the human element. So I don't think that's a concern for us. So going to the next slide, understanding why we want 50% of our millennials, of our membership base to be made up of millennials and Gen Zs, I wanted you to have the supporting documentation that aligns with why we not only want millennials, we as credit unions need millennials. Millennials were the largest generation group in the United States as of 2025, and millennials surpassed the baby boomers as the biggest group, and they will continue to be a major part of population of many years. But what we need to understand is the millennials are the ones that are buying cars, starting families, buying homes. They are your prime revenue generator. But I will also tell you, if we go to the next slide, that when we think about, where we are, the millennials in the workforce, they're saying just in the US, they have higher education, meaning if they have higher education, hopefully their income will align with that. But their education is unmatched by any other generation. So we know that they have the income. The majority of millennials want to buy a home, but due to their student loans impacting their DTIs, they're not able to, or secondly, they don't have the down payment. So the question for you as a credit union is, what can we do and what can we offer these millennials to help them get in a home? And there is a credit union who was at a conference that I was at recently that is offering 100% financing, no down payment, 30-year mortgages that will definitely attract the millennials. We know the millennials will work because they have several of them have 2 jobs or more, but the cost of living is forcing that. So if we can find a way to maximize credit scores, get them over 750, put them in a position where you can lower payments, give them extra cash, then maybe they can get into a position where they can achieve financial freedom. And financial freedom really just means I'm able to pay my bills and I may have $50 left over in my account. What a great way for us to move forward. So on the next slide, we want to understand who the Gen Zs are. So we're giving you supporting documentation that you can use when you're doing your strategic planning to say, here's why it's important for us to capture the Gen Zs and what we can do to move forward. Why we need search engine optimization is because the Gen Zs grew up on their phones. The alpha generation are know nothing but their phones and digital. That's all they know. So we have to elevate ourselves into the digital world, and we have to invest in the digital world, but we cannot underestimate the power of the human element. So next slide. These are just some stats for you to understand about the Gen Zs to help you decide what direction do we need to go in, what's important to them, because not only do we want Gen Zs as our members, we're also going to be hiring the Gen Zs as our employees. So as important as it is to attract and retain members, Gen Zs and millennials, it's also important for us to attract quality talent from the Gen Z and millennial pool. So how do we do that? What do they value? What's important to them? And Gen Zs are really drawn towards, give me a good cause. Give me a really strong cause that I can sink my teeth into. Well, there's no one better than Credit Union World to sink your teeth into for a good cause. We live and breathe to make a difference in people's lives. So does your mission statement align with that? Are we truly making a difference in people's lives? You guys need to ask yourself those questions. Next slide, please. So when we think about the Generation Alpha, and you look at this group, and they're saying this group already makes up 42.75% of the US population, most racially and ethnically diverse groups of all generation groups. So you have to keep in mind, how do we attract the Generation Alpha? Because guys, that's going to be our future after the generation, the Gen Zs and the millennials. We cannot wait until they become 30 to start adopting this group. We have to start now. So going into the, high schools, into the school system, and offering educational programs. For example, right now we're going into universities and we're educating these students on how to, one, establish a credit score, two, how to protect and manage that credit score. We're educating them on predatory lending practices. We're educating them on interest rates on credit cards, default rates, annual membership fees, so that they're educated, because we believe in the 4 E's. And if you embrace the 4 E's, one, engage them, two, educate them, three, empower them to make better decisions through the education, and then elevate their financial well-being. And those are your 4 E's. So make sure we don't lose sight of the Generation Alpha either in this process with our digital platform and our human element platform. Next slide, please. Okay, so when we think about only 11% of Gen Z consumers and 15% of the millennials make up the credit union's membership base, where conversely, 79 and 69% respectively use the larger banks. And I'm going to say not just the larger banks, but also the fintech companies. We have to get out there and market ourselves that we are not, we are local, but most of us have access to over 30,000 ATMs through the co-op. Some of us have 80,000 ATMs. We give them access to all of those locations via GPS on their phone. We do remote deposits. We have almost close to 5,000 branches through the co-op. Why are we not, if we are using these, why are we not visibly marketing that? So keep that in mind, because that is a driver. Even though they may never use an ATM, they want to know that they're on every corner. So why do you think the millennials and Gen Zs are using the larger banks? One, they're soliciting them aggressively. Two, they're offering them money to open up checking accounts. They're offering them cash back on their credit cards, which they love. And we have programs like Savvy Money that allows them to round up and put money in savings. And we also have up to 80,000 ATMs, and we have up to 4,700 branches nationwide, worldwide. Are we marketing that aggressively to these Gen Zs and millennials to let them know? We give you access to your money at your fingertips. Anywhere you go, you can access your money, and we make it easy for you to do business with us. And if we say we're going to make it easy for them to do business with us, we need to streamline our processes. We need to minimize clicks. We need to minimize requirements, but then we need to build the relationships and educate them on why they want to stay with the credit union and what we're going to do for them in the future. So next slide. So part of our process is to build a culture that says we care. Empathy is a key factor in that process. Empathy builds relationships, feeling their pain, understanding what millennials have struggled through, understanding that they went through 2008 recession, understanding that they struggled, and then look at the cost of living once they were able to get a job. Now, when we talk about creating a culture for growth and we talk about empathy, it's amazing to me how little empathy is actually shown in our culture anymore. But for us to develop a caring culture for growth, it starts internally. It starts with the CEO. Then it drills down to our C-suite. What are we doing to show our employees how much we care about them? Are we engaging our employees? Are we asking for their feedback, their input? Are we asking them for their innovative ideas? Are we encouraging creativity within our organization? Are we developing our employees as leaders? Are we utilizing every aspect that we can to make it a seamless environment and yet create strong relationships? So I hope that throughout this presentation that you've gained some knowledge, you've got some key takeaways. There are programs that you can offer. Business development is crucial. How you go into the community, how you cultivate the relationship, what are you offering that other financial institutions aren't offering? Become their educational partner, become their resource partner, because your goal is to reach all the employees of these companies that are surrounded within your branch areas. And opening those doors is only done through relationship building. So the human element is always going to be there, but the digital element has to be there to make it easy for them to move forward. So you've got business development externally, you've got employee development internally, you've got technology development internally, but the human element will always rise to the top. Thank you, guys. I'll open it up to questions, comments.
Thanks so much, Celeste. That was Great. I know you have had, you had already said that you have a lot of slides and people have already been emailing me asking for the deck and copies of the presentation. So I know they've gotten, the takeaways are there, absolutely.
Good.
And I think what's interesting is that, and our CEO has been saying this for years, is that the credit union, the credit unions have so much in common with the younger generations, what drives them and their purpose, Gen Z and millennials. And I think there's
Yes.
so much opportunity there. They are transaction driven. They want things easily and digitally, but relationships matter to them as well.
Yes.
So
Yes.
it's getting them in the door and keeping them.
That's right, Erica.
so-
It is. It's so important. And for us to create that balance and, it's, for us, it's a balancing act and there are a lot of moving parts, but that's, as the leaders, that's our job.
Right.
And strategically, it's important to focus on that in strategic planning and putting action plans together to bring it to fruition.
Yes, so for everyone here, if you have any questions, please do ask. This is the time. But the Celeste's presentation deck will be available. I know a few of you have already reached out. I had one CEO say she couldn't keep up with her notes, so she was hoping that you'd have it available because she said there was a lot of good information. And then the recording of this webinar will be available early next week. So so if you missed anything, you can see that again. I don't see any questions coming in, but the request for the decks, the deck is, and I have a text here as well.
Good.
Celeste, thank you so much again for being here today. There are a lot of valuable information in the time that we had you. And as far as what's coming up for the trainings, on the 29th, we're going to be having someone from Conetrix speak to us about innovation. So the latest trends and innovations in financial services. That's a 2-part webinar that'll be on April 29th, and then part 2 will be on May 13th. On May 6th, we'll have Jeff Rendell from the president of Rising Above Enterprises. He'll be talking about the 20 trends that will shape your credit union's future. And we just added yesterday, we will be having an economic presentation from Jason Wang, who is at the Federal Home Loan Bank of Boston. He's an economist, and he'll be talking about what's going on with the Massachusetts economy and nationally, and then, the impacts of the recent election, as well as, just related impacts in the economy for credit unions. So I will be sending out information on that. You keep an eye out for additional webinars and programs. And we thank you all for being here today. Thank you so much. I hope you have a great day. And Celeste, again, thank you so much. I really appreciate this.
Thank you, Erica, and thank you all for allowing me to be a part of your program. You guys have a
Absolutely.
wonderful afternoon.
You too. Have a great day. Bye-bye.
Thank you. Bye.